What's going on, guys? It's Seth. Welcome to my channel. For the first people who are new here, if you're returning, thanks so much for watching. I want to get right into the video. Today we're talking about my plan to retire early with dividend investing and what that looks like. You can see here I got my portfolio right at almost $72,000. I got $2,650 in cash, $69,132 invested in this portfolio. I want to get right into this so I don't have to waste your guys' time or anything like that. But I want to show you what my portfolio looks like today and what I want it to look like in the future. One really important thing when you are investing is when you plan on retiring. I'm 25. I plan on potentially living off of this portfolio when I'm 35 to 38, right? I got like about a 10 to 13, 14 year time frame right here of when I would like to start drawing income from this portfolio. Just a quick little backstory. My salary is about $65,000, right? So I save more than half of my income. So I'm saving around $2,000 a month. That's kind of my goal. Now, I've kind of been blowing this out of the water because I'm just coming up on 2 years here of starting this portfolio over again. I started this portfolio back in 2020, sold out of all of my positions because I just wasn't, I was mentally there, but emotionally I wasn't. So I built this portfolio up to $14,000, sold out of all my positions pretty much. Right, it got all the way down to $500 at this point. I started up again in August of 2022. So I'm August 23rd, 2022. So I'm coming up on just about 2 years here. And you could see here in August 26th, I put about $3,000 in. Anyway, just about 2 years, and I've grown this portfolio to $72,000. So I've been able to, grow this portfolio about $35,000 a year. Not bad, right? Living off of a $65,000 income. I have a lot of other side hustles that I do. I run some social media accounts. I do stuff like that. Anyway, let's get right into this portfolio here so I can show you the good stuff. This is where I am at right now, and we're going to go over my strategy for retiring soon and what that looks like. Now, when I say retire, I don't mean I'm going to stop working. I'm just going to be able to do what I want when I want, whenever I want, I guess. Where we're at is I have almost 30,000 in SCHD. I have DGRO, VOO, and VTI. Now my plan is to build up these two positions. I want about $60,000 in SCHD. I want about 30,000 in DGRO. Now this VOO and VTI, I'm going to build up these two positions, and 10 to 15 years from now, I plan on selling these and investing into higher yielding dividend ETFs. That's my plan. Now, I want total return as well. So the important thing here, and this is where some of the strategy comes in, I have purchased individual holdings like Johnson & Johnson, Coca-Cola, Procter & Gamble, right? I purchased these individual holdings. And what I found is I was dollar cost averaging into these stocks. And that just isn't the wisest thing to do. Yes, they're dividend stocks. Yes, they're staples. I don't believe these companies are going anywhere. Again, companies like Johnson & Johnson, Coca-Cola, Pepsi. But what I was finding is I was vastly underperforming the market. Yes, my dividend income was growing, but my portfolio right now is about 72,000. If I just invested in VOO, my portfolio would be worth about $77,000. So I'm about $5,000 off, right? And there was also added risk investing into those individual holdings because I wasn't buying at the right time. Now, and this is some of the strategy I want to talk about here with you guys, is when you are buying individual holdings, it took me kind of 2 years to learn, you still need to buy them at the right price, right? I thought I could just dollar cost average into individual stocks, especially safe dividend stocks. And yeah, I guess you can, but you're going to underperform the market. Yes, your dividend income is going to grow, but I think sometimes that's why dividend investing can get a bad rap by some people, right? People who call themselves the bogleheads because they're going for total return, right? Yes, you can buy individual holdings and outperform the market, but you need to buy it at the right time. For example, I started, let's see here, let me show you my individual holdings here. This is something that I'm proud of, and it's my purchase of ticker symbol O. So I don't know why that clicked there. Let's go back here. Let me show you ticker symbol O. I have an average share price, I think it's at like $49. A lot of people have been selling out of this company because it just got beaten down. But when there's companies that you track, I've been tracking a lot of these individual holdings, Johnson & Johnson, Coke, Realty Income Core. When you track these, right, I've been tracking O for 2 years, and I saw a buying opportunity, and you can see my average share price is $51. There's a lot of people who dollar cost averaged into this, and they were buying at $60+. So they're way down on Realty Income. For some people, it's their worst performer. That just shows, right, you need to buy at the right time. You really do. You know, obviously you can't time the market, but you need to buy when these individual dividend holdings are on discount, because I locked in, you know, a 6% yield on this thing. I wish I put more money in, but I didn't. I'm also buying up a lot of Visa right now because I think Visa is at a good price. So, you know, a lot of this is I allocate out of my portfolio 15% of my total portfolio into these individual holdings. So I'll show you right here, right? I don't know why I was clicking home to go back. That was weird. I have 85% into all the funds I was just showing you, 15% into my individual holdings. Now, this is really similar to what DGI investor Jake, this is very similar to what he talks about, having a core and satellite positions, right? I have my core positions, but I also have this 15% allocated to individual holdings, so I can still have fun, right? You can see it's a little off weight right now. I'm close to 70-30, but I'm slowly growing these funds here, right? So my plan in 10 to 13 years really is when I sell out of VOO and VTI to reinvest those into other yielding dividend ETFs that don't have quite a lot of overlap, right, with SCHD and DGRO. So that might be investing into VYM, right, having a higher yield. And then I'll throw in maybe a SPY-I or a JEPI or a JEPQ. The great thing about this is I'll have 10 to 13 years to see how JEPI performs. It's still fairly new. It's yielding quite well, and it's performed quite well compared to the market. JEPQ, right, these are high yield covered called ETFs. JEPQ, I know, has outperformed VOO because the tech space has been on such a tear. And these are great things, but, you know, it's still been fairly recent, fairly new. So I will definitely allocate the money I put today in VOO and VTI, right, because I still want some of that total return. And I'm going to put that into the higher yielding dividend ETFs. Now, the great thing about VOO and VTI is these are still dividend paying ETFs, right? They yield pretty low, 1.3 to 1.4%, and they grow their dividend at about a 7% rate for the past 10 years. 7 to 8% is what they've grown their dividend at. So technically, these are still dividend growing ETFs, which is wonderful. Now, there's a lot that we can get into about, you know, should I buy VOO? Should I buy VTI? What should I buy? I just bought both of them because that's what I'm comfortable with, right? I think if you own either one of these, it's going to be great. VTI, anyway, a huge portion of it is the top, you know, 8 companies: Facebook, Tesla, Google, right? VTI is a big portion. A big portion of VTI is those companies. So obviously take what I say with a grain of salt. I'm just investing in both. Is it more diversification? Sure, but VTI is so heavily weighted toward, you know, the Magnificent Seven, right? That some people can make that argument. Oh, just invest in VOO, right? Some people make that argument. I just have both. That's just my personal preference. Now, what I want to show you guys is my dividend income right now, okay? Dividends mentally are really good for me because the market can sway, right? The balance of my portfolio, the principal, can sway a lot. Sometimes it could be 72,000 as it is, and other times, it might drop all the way down to 60 something thousand. Who knows, with a 20% correction. But this right here, my annual income, more than likely will stay the same because I'm investing into quality companies with high cash flow, with good, nice, free cash flow. That's what I'm investing in. So my annual income can stay the same. So this is just a great way to invest for me, emotionally, mentally, right? This keeps me going, keeps me moving forward. It's like a game that I play with myself. I see this annual income tick up and up and up. Now this dividend growth is off by 3%. I don't know why Simply Safe Dividends does this, but you can see my dividend growth rate here is 7.2. It's really 10%. 10.2%. So, and it's off by 3. If anyone can explain to me why this is off, that'd be great. That's what we're looking at. Now, for my individual holdings, I do have some higher yielders. ARC, EPD, MPLX, Realty Income. I have some higher yielders in here, and that's just for fun. And I really like these companies, and I like the dividend income. I'm not investing a lot of money into it. You can see ARC is 1% of my portfolio. EPD is a little higher, 4%. I try to not let any individual position be more than 5% of my portfolio, right? But you can see Realty Income's only at 2%, MPLX 3%, so I keep these at a low allocation in my portfolio. You can see my income calendar coming up for the year ahead. I am making $712, right, for these 3 months, July, August, September. That's crazy. I mean, I'm making more, right? Coming up here, I'm going to be making close to $1,000 in the next 5 months, right? It's pretty awesome to see. So that is my strategy as of today. My strategy has changed over time. My goal, again, I would love to see this portfolio with a portfolio balance of $300,000. Once I hit $300,000, now we're talking about, my annual income really being able to pay for my bills. And then I can use my side hustles to pay for other things, and I could quit my main job. So I grew this in 2 years to about $72,000. So we're looking good. Things are looking bright. Thanks for watching. I just wanted to go a little bit more in depth from my last video that I made. I wanted to talk a little bit more about my exact strategy. Thanks for watching. Stay tuned. I'll be making videos hopefully more often. I have a 1-year-old now, and it just takes up a lot of time, which is wonderful. I love it. But, less time for videos, so it's a give and take. But I'll be making as many videos as I can when I'm not exhausted. So thanks for watching, guys, and take care, and I'll see you in the next one. Bye.